Just taking a look at the broad macroeconomic picture over in Nigeria. First of all, we've had the report released by the National Bureau of Statistics saying that the economy grew by 7.2% in the first quarter, really raising quite a few eyebrows. What has the market made of that report that's come to the fore, and how viable that statistics really is?
Good morning, Alishia. The forecast, the growth figure from the Nigerian Bureau of Statistics generally have always raised questions from analysts, in the sense that we saw in Q1 that there was a negative growth to private sector, though there was significant growth to the public sector. We also observed that the rate of unemployment seemed to have shot up in the first quarter, with also just general volume of activity in the economy seems to have slowed down significantly in that first quarter. However, the NBS came out with a very strong positive growth estimate, and we think that if we look deeply into those figures, we would find that the major driver of the growth for that first quarter would be oil revenue. And I'm sure you know that for Nigeria, the major revenue earner is oil, where we get about over 50% of the total revenue for the nation. So we think that perhaps it might just be right, considering the fact that oil prices rallied as high as 85 naira per barrel within the first quarter, $85, I beg your pardon. So perhaps it might just be right, but we've always had concerns for the kind of figures that we get from the NBS in terms of growth.
Well, in this context, let's take a look at just some of the stocks that have been on the investors' radar screens through this week. Of course, Flourmills undeniably stealing its fair share of attention because of the results it released this week. There was a significant improvement in profitability margins year on year. Profit before tax and PAT margins increased as well. Your overall view on Flourmills, having dissected those results?
We are very, very bullish about Flourmills. The result was a stellar performance. They beat all our estimates in terms of turnover, in terms of PAT. Their result was significantly above our estimate, and we think that the key driver really for Flourmills, on the one hand, was a significant decline in wheat prices, which declined by over 26% during the year, thus giving them an enhanced profitability because of the lower overheads. And beyond that as well, in the midst of the very tight credit environment, Flourmills also managed to continue to grow their revenue. And even in terms of their flour milling business, which contributes over 60% to the total production to their total production cost. So we think that the result for Flourmills is a very, very strong performance, and we expect them to still be able to sustain that performance going into the next year.
Well, if we look at the performance and what has provided bulk of the support there, it's the fact that we've seen low prices of wheat in the global market, resulting in reduced cost without a commensurate decrease in the price of flour in the domestic market itself. So a key risk to this valuation would be, one would assume, a reversal in that downward trend of global wheat prices. So to what extent are you pricing that risk factor in?
We are pricing it in. Like you rightly said, there's a decline in wheat prices, and yes, with the global positive outlook for growth, we would see some slight reversals there. But having said that, you also said that Flourmills, in terms of their pricing, they continue to enjoy attractive price, because in Nigeria, the demand for flour, the demand for cement, rather, which is the other component of their revenue earner, which is about 40% of that, the demand for cement is very, very high, and the local manufacturers are not able to meet that demand, and to that extent they are able to enjoy attractive pricing. And even for flour, in terms of the milling as well, the price is also very, very attractive, despite the fact that we are seeing increased competition. But we think that they will be able to maintain their pricing, they will be able to maintain the growth that we have seen. However, for us, our critical risk for flour mills will be the foreign exchange rate. If we see a deterioration in the foreign exchange, then it might significantly affect their performance, considering the fact that about 60% of their raw material is actually imported. And that was what we saw in the last financial year, when there was about 36% decline in the value of the naira. Well,
let's take a look, because we've highlighted now the risks that prevail to this outlook. But to bear in mind is that this is a player that has diversified somewhat. We've seen the fact that it has a 22% ownership in cement company Unisem, really holding it in good stead when it comes to profit before tax, that improved profit before tax line, so to speak. Let's take a look at that involvement in the cement industry and to what extent that does provide a cushion moving forward.
Yes, like I just said, it does provide a good cushion for them, because in the cement industry, there is excess demand right now. And in terms of the volume of the local production of cement, it doesn't meet the demand. And there's also a form of entry barrier in terms of the import quota that the government has given to specific importers, and flour mills happen to be one of the beneficiaries of that. So what you find is that for the cement sector, which we just even recently released an outlook, we are very, very bullish on that cement sector. And once that growth is there, which we think for the next 2 to 3 years, the policies will continue to be in their favor, and the growth outlook is very, very strong. So to that extent, even Unisem would help to boost the performance of flour mills.
Taking a look then at that cement industry specifically, if you're looking at the likes of BCC, of Ashaka Cement as well, which stock for you right now is holding most value, considering that you're bullish on the sector across the board?
We think the most value for that sector would come from between Ashaka Cement and BCC, where we expect a positive performance of up to 30 to 50% within those two stocks. Even on a year-to-date basis, the sector has outperformed the market as a whole by about 22%, and we still think that within the next 12 months we should see up to another 22% positive outperformance from that sector. But the key drivers for us would be BCC and Ashaka Cement, and that's because those two companies are actually increasing their capacity significantly, and they're also investing huge capital into diversifying their energy source into low-cost alternatives.
Let's take a look now at the banking space. We know that many investors have been pretty shy of mid-tier banks, with the entire financial crisis having played out in Nigeria. It's seeing somewhat of a turnaround now, and it seems like investors are finding the cheaper prices on offer just simply too hard to ignore. What's your view on the mid-tiers? And I know that a firm favorite for you within that space is Access Bank.
Absolutely. Our key take within the mid-tier sector is Access Bank. Yes, investors, there's a huge mispricing between the mid-tier banks and the top 4 banks, and that's rightly so, because investors have generally become very, very cautious in view of the non-performing loan saga that we had in the industry. But already we are seeing trends of recoveries coming in, and then with the AMC, the Asset Management Company of Nigeria, which will be the resolution vehicle, almost at the point of being signed and then commencing operation, we think that will also even help to enhance their asset quality and also boost their liquidity. If we also look at the result from UBA, it's already showing that there's some form of increased appetite, though slight right now, for for credits, and we think that that really would be a major revenue earner. As banks begin to take up a little more appetite in terms of credit disbursement, then you would see a significant growth in their interest earnings. And we think that Access Bank, for one, stands very well positioned right now, trading at a deep discount of up to 40%. We think that Access Bank stands a very good chance to outperform within the mid-tier banks.
Well, with those